Database, you can click on, if you go to the main website, you can click on database, then you can go to volatility. Or sorry, you can go and look at different styles. So you can look at the volatile ETFs, you can look at the different investment styles. So for instance, investment style, aggressive growth.
What's up, everybody?
Subway.
Wait.
Why the fuck you going from Ohio to be coming all the way over it? Ain't no wrong in Ohio?
Yeah, I'm sorry.
All right, y'all, get to it.
Well, squad, what's going on?
I'm going now. You ready?
All right, got some people trickling in here. If you guys could please mute your mics on your end, so that we can get through this lessons here. Got some more people trickling in. I'll give everybody a couple minutes. Right now it's 7:03. I'll give it 3 or 4 minutes.
Now we need to do something else. We've been on system for so long.
That's not why.
That's the reason I'm telling you. We've been on the system all day.
We're not being on the system all day. We mean all day today.
We got about 100 people in so far. Yeah, someone's asking in the chat in Zoom. Chris is not recording this, but I am. So we should be good on that front. I just hit the record button about 2 minutes ago.
The thing I kept on.
All right, everybody. I got everybody muted here, but you do have the ability to unmute yourself. But what we're going to do here is I'm going to be sharing my screen, and I'm going to walk you guys through. I'm going to walk you guys through how I trade. Okay. Now there are a lot of different subtle nuances into how I trade, but I'll go over the 2 main strategies that I use. Okay. The first of which I'm going to show you is called my accumulation strategy, and actually, it's pretty comparable to what a lot of you probably know, because Chris and I trade pretty similarly. Not exactly the same, but it's pretty similar. And the good thing is about this particular strategy is that, and I mentioned this last night on the live with Chris, is that this strategy is a microcosm on how a lot of different big investment funds or hedge funds, how they trade as well. Obviously, it's a lot more difficult than that because they're shuffling billions of dollars around. But for the most part, a lot of these big funds use this or some degree of this model in this strategy. So I'm going to continue to let people in here. I'll give it about another minute or 2. But yes, for those of you who are just joining, I will be recording this for you all. And I'm going to try to keep this contained within the hour. But we'll go as long as we need to get the lesson in, and as well as answer some questions at the end. Okay. So we got about 100 people exactly. All right. So for those of you who do not know me and did not catch the live last night, my name is Ashton Noland. I've been trading for about a little over 6 years now. And I've seen a lot of crazy things in the stock market, right? I actually am a recovering day trader. I day traded for about 3.5 years. And, we've all heard the saying that The failure rate in day trading is extremely high, and I can vouch for that. It is extremely high because day trading is probably one of the most difficult things you could possibly try to do in this planet, on this planet, in my opinion. My first year and a half of day trading was an extreme struggle. I was at bottom line. I was in the red after about a year and a half, and I finally started to figure it out and dig myself out of that red to where I eventually was able to start turning a consistent profit on a daily basis. And then about 3.5 years in, I just realized that it wasn't for me. Day trading, you certainly have to have a certain type of personality and a certain type of lifestyle to be a day trader for the rest of your life. And I just wasn't in that position. A lot of us on here have, are married, we have kids, we have lives, we have, a lot of us have jobs, and that's just not suitable for a lot of us. So that's the beauty of swing trading. And swing trading allows you to take a step back, remove your emotions from your trading, and focus on your strategy. All the while having a life, taking care of your kids, going on date nights with your boyfriend, your girlfriend, your spouse, whatever. And that's just one beauty of swing trading. Okay. And I'll get into the technical beauties of swing trading right now. So I'm going to share my screen here, guys. So I'll get to all the questions at the end, everybody, because I see some people have some questions in the chat. I'll open that up at the end, but right now I'm just gonna get to the lesson. Okay. So, okay. So, can somebody vouch in the chat whether or not you guys see my screen? I want to make sure I'm not talking to air here. Okay, perfect. Thank you, Crystal. Thank you. All right. So let me take a step back here. I'll actually do this in real time. Okay. Let me show you a trade that I am in right now. Okay. And this trade is a picture perfect example for the first strategy I'm going to show you guys, and that is my accumulation strategy. Okay. First thing I look for whenever I'm looking for a stock is I want a stock that's been beaten down. Okay. It would be like walking into Walmart and let's say you're looking for a 6-pack of Bud Light, whatever. And they say, hey, today's your lucky day. A 6-pack of Bud Light's normally $13, but today you're going to get it for $9, right? And it's a Friday, and I really, really, really want that 6-pack of Bud Light. So this strategy is synonymous with a discount. Okay, I want a stock, a quality stock at a discount. Okay, one way to determine that, other than looking at this chart and saying, whoa, that's taking a big hit to the downside. That's pretty obvious, right? But I want this to be egregiously oversold. Okay, a lot of you are familiar with the RSI. RSI is a critical tool for this particular strategy and for a lot of different strategies. And funnily enough, the RSI tool by itself is heavily implemented in algorithmic trading. That is one of the biggest reasons why I use the RSI, because a lot of algos use this or embedded in their algorithm. So that's just a little FYI. So I'm looking at AI right here. Okay. Now, how did I find this stock? Well, I found this stock through my chat room, I believe. But the whole point is there is no one set way to find the stock, guys. A lot of people will use a screener like finviz.com. I will use Finviz occasionally, and I'll get to that here in a moment. But using a screener should not be your go-to. That can be dangerous. Okay, that can well, one, it cuts out that legwork, right? And that enables you to be lazy. That's not what we want, right? We want to put in the work. We want to understand what we're looking at. And a lot of people who use screeners are trying to shortcut their trading, and that's not what we want to do. But there is a time and a place to use a screener. It just shouldn't be our go-to. Okay. I found this trade in the chat room just because other people. I'm only one person, right? And each individual on this call, we're all one person. We have 2 eyes, 2 ears, and 2 hands. That's all we have. We can leverage other people as a resource to find stocks, right? That is the beauty of having a community of sorts, right? That's actually why I encourage having a community, being part of a community to some degree when you're trading stocks. So another way is to, look what's trending on social media, but you want to be careful with that. Look what's trending in the news, and then pulling that up on your charts and doing your due diligence that way. So I did find this one through one of my members that said, "Hey, take a look at this chart. It's hitting a low RSI," and I go to look into AI as a company, and they are in the AI space, artificial intelligence space. They are pretty much a direct competitor to Palantir. Okay, we're all aware of Palantir. It's one of the most popular stocks in the stock market right now. So I sit there and I say, okay, well, this stock had a huge run up because this stock had a direct listing, much similar to what Coinbase just did, right? The stock pops, retracts, tries to give it another go, boom, it comes down. This selling was caused by just insiders selling, because remember, on an IPO, there is a lockout period that they can't sell their shares until a certain period of time. But in a direct listing, they can sell their shares at any time. This is what we're seeing here. Okay, the insiders, they want their money, so they're cashing out. This does not change anything fundamentally about the company. However, it does change everything technically about the company from a technical analysis standpoint. So this stock's just been going down and down and down and down, triggering this 30 RSI. Okay. This is one thing that I have to make clear about the 30 RSI. Okay. You could put this on you could put a whole bunch of stocks on your watch list and sort from lowest RSI to highest. And as soon as you see a stock hit a 30 RSI, one would think that would be the time to jump in. No. That is a mistake, because a lot of the time, remember, these stocks are going down, and they're going down hard, and they're going down fast, right? And they're going down for a reason. So what I do is whenever a stock hits a 30 on the RSI, let me get my sheets right here. Let's move this out of the way. Okay. So whenever stock hits a 30 on the RSI right here, do I enter, which would be right in here, okay? Do I enter at that level? No, I don't. I wait, okay? As soon as it hits a 30 on the RSI, then that's when it makes its way onto my watch list. I'm watching it very, very closely, okay? Because if I were to jump in right here, as it's approaching the 30 on the RSI, or right in here rather, if I would have jumped in here, let's say, right when it hits a 30 RSI, look, it's still going down. And this thing could have kept going down all the way down to $50, down to $45. We don't know, right? But we're watching this puppy as soon as it hits 30 on the RSI and waiting for what? We are waiting, let me get my line here. We're waiting for this. We're waiting for sideways movement. We want, and we all know what this is called. We call this consolidation, right? That's exactly what we want. So that way, while it's consolidating, this gives us 1 and eventually 2 confirmations of this support. Now, let's assume that all these candles here haven't been formed yet, okay? And let's just say these candles right here, we start to form a base. And what I look for is a bounce, a pivot of some kind for this downward momentum to stop, or at least be slowing down. What I would be watching for, this candle right here. See how it's going down and down and down and down and down. You see how these candles are getting smaller and smaller and smaller for the most part. You see how big they are down here, but down here they're much smaller. This is telling me that the downward momentum is slowing down. And that's also confirmed by these blue bars. This is my volume. You see how the volume keeps going down and down and down? This is the moment that I strike. Now, we could have consolidation. Consolidation could be one day, right? That's very rare, but it could. So right here, I have 1, 2, 3, 4, 5 days of consolidation with this candle with lower volume, that's my indication. So I start my position right here. And you notice as this is happening, these moving averages are coming closer and closer and closer together. So at this point, let's just say for rough math, my average position size is around $5,000, okay? Or let's just say $1,000, okay, for easy math. So let's say right here, I start to nibble a little bit. Now, if my full share size is $1,000, do I put all 1,000 in right here? No, because we could have a fake breakout right here or a fake reversal here, and it can continue down on us. If it does that, we're still in good shape because we're only at $250,000, or I'm sorry, $250, which is a quarter of my regular position size. Okay, so let's just say that this does maintain the support right here. $250, boom, I got my position started. Now, all of a sudden, I'm paying more attention to this position because I'm actually in it. It's no longer on my watch list. I'm in the trade, right? So now what I want to see is I want to see it bracket, and I want to see it create a nice consolidation zone between this support and the 20-day moving average, all right? I know a lot of you are familiar with how this is going so far, okay? So while the stock and this price remains squeezed between this support and the 20-day, I'm adding. Now I'm talking small chunks, guys. And if we're using $1,000 and I start with 250, I'm talking 50 bucks, 100 bucks, 50 bucks, just nibbling. My goal, let me take this off. My goal is to eventually get right here. For the moment that it breaks above this 20-day moving average, that's when I double my position. Okay. So all the while I'm adding during this little consolidation zone here. So if my position is $1,000, that means that by the time it breaks right here, I should be at $500, right? Because I'm looking to double once we break it. So if I'm sitting at a $500, just give or take, it doesn't have to be exact. The moment we break above this and the moment we close above it, that's where I double. And literally today, this candle right here, I did not double on this one right here because that wasn't convincing enough for me. We broke above it, but we retracted back down. So I said, okay, well, I'm going to give this a little bit more time. I want to see this. I want to be convinced a little bit more. Okay. I want this to close above it. And then yesterday, we technically closed right below it, but I still wasn't quite convinced. And then let me zoom in here. Can you guys please mute your screens? Some of the most heart-stopping moments. There we go. Okay. So today, you see this candle right here? For those of you who know candles pretty well, what is this candle telling me? This candle's telling me that we opened up. Let me zoom in a little bit closer. We opened up right here at the bottom of the box. Price started to come down, looked a little weak. But at the end of the day, we had a nice push and we closed right above the 20. I did not double my position today, but I added nicely today. So what I would like to see is this thing maybe consolidate a little bit longer, let it hang around the 20, and then continue its next leg up. Once I start to see this, boom, I'm doubling down. Okay. So now at this point, my position is set and I let this thing work. Okay. Now, everything that I just explained, that's about a third of the overall trade. All right. Now that I'm in this trade, I have to set my sell targets. Okay. Ideally, let me rewind just a second. We want to set these sell targets prior to taking the trade. Okay. Where do I set my sell targets? I set them based on previous resistance. Okay. So if I take a step back, I want the most obvious and the most recent. The reason why I want the most obvious, because the most obvious pivot points, those are the strongest resistance and the strongest support areas. Okay. So if I take that into consideration, right here would be one. I mean, that's pretty clear right there. That's a pretty clear pivot. And I would probably put the next one. You could put one here. You could put one here. You could put one here. Because support, support, support. Now it turns into some resistance. But I'm not going to do that. I want to give this one some room, because the reason why I want to give this one some room, give me my circle there. Give me my circle. The reason why I want to give this one some room, because look at where we are right here, and look how far all-time high is. That is some blue skies, baby. I want to try to take advantage of this, as much of this move as I possibly can. So personally, I would not set all of these sell targets. I would set some, but not all of them. But for me, and if somebody came to me and said, Ashton, I'm going to set all these as sell targets and scale out all the way up, I would not argue that one bit. But for me, I'm going to take this one out right here, and I'm going to take this one out right here. Because to me, this one and this one are the clearest pivot points. This one is obviously it's a pivot point, but that's too early because that's the day that it listed, right? But here it came up and it came right back down, bounced right there for the next uptrend. So I'm using this as my sell target, and this is my second sell target. Okay. Now, let's just say hypothetically we nail this trade and everything gets off to the races and everything works out great. And let's say the stock just starts doing something like this, starts going up and up and up. And I would say, just based on experience, as we do this, the RSI would probably hit over a 70, which if under 30 is oversold, over a 70 is overbought. That means the stock went up too high, too fast. I'm just going to take a guess and guess that the stock would hit a 70 RSI right there. If that were indeed the case, and it hit a 70 RSI before I hit my first sell target, doesn't matter. I'm still taking profits right here. This would be my first batch of profit taking since entering this trade, right? And the reason why you want to do this, and this is the only time I ever do this on the RSI, is whenever it hits a 70 RSI the first time since I entered the trade. Because what tends to happen is whenever a stock gets pulled back this far and it hits a 70 RSI for the first time, it always tends to retract. Not always, but a lot of the times it will retract. So this is a good point where I take some off the table. And how much do I take off? As a rule of thumb, I'll trim off maybe 20% or so. That just depends on your threshold. And depends on how conservative or how aggressive you want to be. If you want to be more conservative, you could shave off a fourth, right? Which would be 25%, or you can shave off a third, right? Some people would say, well, I want to shave off a half. To me, that's a little too conservative, because we still have all this room, right? And if a stock has been here before, it could definitely get there again. It's just a matter of when, right? And how quickly. So right here, I would shave off, 20%, maybe a fifth. And as we do this, as the stock plays out like this, what is the 20-day moving average going to do? The 20-day moving average is going to do something like this. It's going to start looping around, right? And it's going to do something, it's going to be a lot slower than the price action, right? So the 20-day is going to do something just like that, right? And the reason why I scale some off here, because it tends to hit a 70 RSI and then pull back to the 20, all right? Now, if we do that and the 20 is still low enough and this is still a good risk to reward ratio, I may put some back on. But you do have to have a stop somewhere, right? And if, let's say the stock just runs out of steam, hits a 70 RSI, retracts, and just goes boom, right? If this were the case and the 20 SMA is right here, this could be your exit, your full exit. Now, again, it's all based on how conservative, how aggressive you want to be. Personally, If it broke below the 20, I typically don't sell my entire position, but I'll sell a good chunk, and I'll just wait, and I'll just say to myself, okay, the stock wants to go up, it's just not quite ready yet. So if I sell let's say a quarter here, I'll sell another half here, which puts me down to a quarter of my original position, right? And then if we break below this 20, well, I still have this support here, right? So this will be my final stop, right? But let's say it doesn't do this and the stock just keeps going up. Stock keeps going up and tags our first sell target. Okay, boom, I'll sell off another quarter. So now I'm down to about a half a position. So now if I'm down to a half a position and the stock then retracts back to the 20, well, I still have a lot of leg room up for my next sell target. I can keep putting on the way up, right? This is the beauty of swing trading, because if you do this and you take profits and you take some off, you take profits and you put some back on, and you keep repeating this, guys, you have realized gains coming to you in a very consistent fashion, and you stay in the trade, and that to me is what I call that compounding on steroids. Now imagine you have this one trade and you do this with 5 trades at once, and then 10 trades at once, and then 30 trades at once. Right now, as of today, I believe I counted the other day, I think I'm up to 43 trades going on right now. And that's what you can build up to eventually, right? And this can be just a compounding machine. So and you rinse and repeat this process all the way up to the top to your final sell target. And honestly, I've had a lot of stocks who do reach this level, but I personally do not like getting completely out of a trade. I just don't. But there are some times where it calls for it. But I would much rather keep some skin in the game and keep that trade going, because then I familiarize myself with how it trades. I understand the chart, I know the chart, and I know the price action and how everything moves. So let's say we get all the way up here and we tag my final sell target. I may keep, I don't know, maybe a 7th or an 8th remaining into position, and just wait for the pullback just to rinse and repeat and do this all over again. So as a reference point, Roku, I know Chris is a big fan of Roku. Roku's probably my favorite stock to trade in the entire stock market. I've been in this swing trade for about 2.5 years, doing exactly what I just showed you guys. It runs up, it tags sell targets, boom, I'll scale out, pulls back, wait for it to consolidate, add some more, and you just keep rinse and repeating. So you guys can see here, my cost basis is 148 on Roku right now. And this pullback right here, it's a good time to add some back on, right? And ride it back up to all-time high, take some off, and then you just keep doing this thing over and over and over again. Now, going back to AI real quick, this particular trade, this may consolidate and go sideways. It could do this for 2 or 3 months, guys. 2 or 3 months. Now, this is why I call this my accumulation strategy, because when a stock gets battered down this badly, it's kind of like a shock wave, right? It hits Earth really, really hard, and that shock wave, keeps getting spread out for it to finally dissipate altogether. So whenever a move gets this violent to the downside, it usually take some time for that shock wave to subside. So this could take some time. The con is obviously that it could possibly take a month, 2 months, 3 months, we don't know, right? But the pro is that the entire time that is accumulating right here, or consolidating rather, I'm building this position up. So if my normal share size position is around 5 grand, this trade could possibly turn into a 7 grand, 9 grand, 12 grand trade, right? That's the pro. So there's a trade-off for everything, right? Pro is that I can build this up to a nice position. The con is that it may take a minute to get going. I'm completely cool with that, right? So that way, whenever it does get going, and it will get going eventually, I'm in a nice position. So that is my accumulation strategy in a nutshell. Now, the reason why I showed you this and the reason why I'm going to show you my other strategy is because they complement each other extremely well. Okay. Let me show you a stock that I jumped in a couple months or about a month ago or so, maybe 2 months ago. And the second part of my strategy is what I call quick hitter or quick hitting trades. Okay. And you can see here, this is stock MGNI. And I got in this stock right in here. Okay. You see my cost basis is white line, so it goes right through this area. This is when I first got into it. Now, these trades are the flip side of the accumulation strategy that I use. Right now, accumulation, the pro is that you can build the position up. The con is that it takes a long time. These trades are the complete opposite. The pro for these trades is that they can get going very, very quickly. The con is that I may not have the time to build this position up, right? I could just throw a lot of money into a trade like this, but that would be pretty irresponsible, right? We want to scale in no matter what, no matter how tempting the FOMO is, no matter how tempting the craze is on social media. We always want to scale into our trades, because whenever we do that, it gives us a natural hedge to the downside. Because let's say I jump into MGNI knowing that it's a fast moving stock, and I'll explain that here in a moment. And let's say I jump in with $10,000 right out of the gate, boom, in one fell swoop. Well, if I guess and I guess right, that would be a really nice gain, right? But what if I guessed wrong, right? And that does happen. It happens. I mean, that's a 50-50 guess at that point. It's either going to go up or it's going to go down. We want to put the odds more in our favor, right? And if the odds are 50-50, we want to put the odds in our favor in terms of money. And we want to do that by scaling in little bit at a time. We want to test the waters. It's kind of like what Chris mentioned last night, kind of like boxing. It's you got to jab and you do some body shots until you figure out somebody's weakness, and then you go for the haymaker. That's exactly what we're doing whenever we're swing trading. So MGNI, let me pull up. Let me pull up this screen here. This is when a screener does come in handy, right? Not for the screener's sake, but for what FinViz offers, right? Can you guys let me know in the chat if you guys can see my FinViz screen? No? Okay, give me 1 second. What about now? You guys should be able to see my FinViz screen. Yes, okay, thank you. All right, so whenever it comes to my quick hitting strategies, right, I do have a certain screener for this, right? And I'll show you the parameters here. I have it saved already. I call this my beta screener, okay? Beta, for those of you who don't know, that's not gonna work. So beta is pretty much an indicator that tells us how quickly a stock moves or how slowly a stock moves relative to the overall market, okay? And for the sake of just having a standardized number, the average number is 1, right? So under 1, over 1. And what that means is a beta of 1, that is the market itself, right? But I want to look for a stock that moves faster than the overall market, right? I also want a stock that has nice volume to it, relatively speaking, and I want a stock under 20 million float, okay? And what I'm looking for is a stock that's pretty small in terms of shares available to trade, but has good volume, has higher beta, which means that it moves quickly, okay? And at that time, let me stop sharing my screen, get back to my chart here. At that time, whenever I ran that filter and I ran that screener, MGNI was popping up on that screener. Now, I had tons and tons of stocks that I had to choose from, and I went through all of them on a chart, literally. So a screener is only good to an extent, but you still have to put in the work, right? And I saw that this chart was in an uptrend, because remember I got in right here. I saw that it was in an uptrend, and it came up, and I saw that it was pulling back, right? And it was pulling back, and it was hovering right on the 20 right here. And if I remember correctly, I'm pretty sure I started watching it right in here, and this is where I made my move. And you see, ever since then, we were just off to the races, right? Because I knew, like, hey, I may not get much time on this, so let me get in. And my normal share position is around 5 grand, right? 5 to 7 grand, somewhere in that range. And at this time, right here on this candle, I believe, I said, hey, this is in a serial uptrend right through here. And we're about to break the 20, and we could see this thing pop, because you see how it pulled back to the 20 here, boom, pop. Plus, I knew that this was going to be a good setup, because I had my stop right here, because this was the pivot point, right? So let me get out my handy dandy snippet tool here. Let me, guys, in the chat, can you guys let me know if you see my snippet tool? You guys see me making drawings right here? No, dang it. What about now? You guys see that? Okay, perfect. So this is the same chart. I'm just going to use it to doodle on a little bit. So I jumped into this stock right here, and I knew this thing can move fast, right? Because it's a high beta, low float stock. And I have my stop here, and I say, hey, I think the risk is worth the potential reward on this. So I have my stop here, and I know exactly where I'm getting out. And I think I started with maybe $2,500 on this particular position. But the moment we broke above the 20 right here, that's where I doubled my position. So so now I was sitting at a $5,000 position, and you would think that at that time this would have been a sell target, because this was the previous all-time high. That doesn't make sense, right? If I take off that arrow, and if I were to sell right here, and this is my support, this is my exit, that means I'm risking 1 to make 1. That is not a good risk to reward ratio, okay? You have to give this trade some room for your risk to reward ratio to make sense. Now you're probably asking, well, Ashton, if this is all-time high and we break all-time high, how do we know where I'm going to be selling at? Because I don't have any resistance points to base it off of. That is where, let me go back to my chart here. Okay, now I'm back to my chart. That is where Fibonacci extension comes into play. Okay, exactly. Yeah, Tiny. Yep, you're talking about it in the chat room. You're exactly right. This is where Fibonacci comes into play. Now, I use Fibonacci a little bit different than a lot of people, but I promise you it works. And the Fibonacci tool in Thinkorswim is this percent sign right here. Okay. Essentially, the way Fibonacci works is if I'm using this as my top point, You draw it all the way down to the bottom. I could draw all the way down to here, but I'm not going to do that. I use right here. Okay. Now you see how these yellow lines expand out? Now I use the Fibonacci retracement tool, but I use the extension percentages. And what this means is these, we have a 1.27%, and a 127.2%, 161.8%. And this tells us the areas that the stock is most likely to go based on the Fibonacci mathematical formula. Okay, it's a very popular indicator that a lot of people use, right? So I use these as my sell targets on the way up. Okay, let me scrunch this down just a little bit. So as I enter right here, I'm at a full position, and I'm not going to sell right here because remember, this is all-time high, and the risk to reward doesn't make sense at that point. Okay, and as we go up, we hit it, boom, I scale some out right there. Very similar to how I did on the accumulation strategy that I just showed you guys. Okay, and then as this stock goes up, and as I know that this stock is a fast-moving stock, would it make sense for me to keep my stop all the way down here? Probably not. So what I do is as the stock goes up, I move my stop. So at this point, my stop is now all-time high. So that way it gives me a hedge to the downside as I'm scaling out profits. And this stock or this particular trade just kept going and kept going and kept going. So as I kept going up, that's where I kept pushing my stop, right? And then we hit my next sell target in the next Fibonacci line. Boom, I scaled some out. And at this point, I saw this. I see consolidation at the top, and usually that can trigger or signal some kind of reversal, right? So while we remained in this consolidation zone, I'm taking more profits because I'm feeling like maybe this stock may be running out of steam and may not get up to my next Fibonacci line, which is right here, right? The 261.8. And as we get further and further away, you notice how these moving averages are getting more and more spread out. That's another indication that this thing may reverse, and inevitably that's exactly what happened, right? So scaled out once, scaled out twice, scaled out 3 times, and I think 4 times. Now I'm down to a really, really, really small position, right? And you see this entire time, it just keeps pulling back and keeps pulling back and keeps pulling back. I'm still in this trade. I'm in like 15, 20% in the trade. But I want to remain in this trade because this stock can really, really, really move, right? So I'm going to take off my Fibonacci lines here, clean this up just a tad. So, and you guys can see my cost basis is right here. So I'm still in this trade. I'm just waiting for this trade to set back up. And you guys can see right now, what is this stock doing right now? That's some nice consolidation. And it's really, really hard for the stock to consolidate. But when it does, it can be a launch pad to get the stock going. And just the stock is consolidating. It's actually consolidating pretty nicely right now, considering the overall market sentiment. And this is a growth stock. It's a high beta stock, and I'm just waiting for that sentiment to get back into the market. But the stock is consolidating very, very nicely. Plus, the great thing about this is that I held on to my position. Since my cost basis is $27.16 and prices is around $38 or so, once I start buying back into this trade, since my cost basis is down here, I'm essentially getting a discount, right? Because if my average cost is down here and I buy up here, my cost basis is only going to go up to here. Even if I buy into here, my cost basis is going to be right here, and I'm still getting the stock pretty much at a discount. That is another beauty of swing trading, guys. And again, this is compounding on steroids once you get this up and going, but it takes time to get it up and going. 100% worth it though. So going back to this trade, I actually have it on my watch list. I send out my watch list every single week to my group, And this one is going to be on my watch list for next week for me to put back onto this trade. Because if this, knowing that this is a quick moving stock, the beta on this, I believe, is 2.4, which is, that means it's really, really delicate to movement. So knowing that, and I can pinch off a little bit more of this position in here. If it starts to come down a little bit more, great, I'll take it. I'll take it. If he wants to keep coming down, great. If he wants to come down all the way down, back down to the 200, that's a little too far, but you know, it is what it is, you know, and if it comes back to the 200, consolidates, and then I'll just start adding back on down there too. And then you see this massive descending triangle right here, kind of like it's like a giant bull flag, right? Let me draw this out. You see this? See how it kind of looks like here's the flagpole and here's the flag, kind of like a giant bull flag, right? What I'm watching for is I'll keep adding on to this position, not when it breaks above the 20, because all these moving averages are pretty close together to where it makes them obsolete at this point. I'm waiting for a break of this descending triangle right here. The moment we break above this, just like that, we're off to the races. And then my sell target has already been established from my previous Fibonacci lens. It's like having a moving puzzle, right? And you're constantly having to restructure the pieces to the overall puzzle, right? And that to me makes this fun. It makes it fun. It makes it, and whenever you truly enjoy it, it makes it more sustainable, right? And also whenever you truly enjoy it, it really does help mitigate your risk, and it also helps you strip your emotions from your trading whenever you thoroughly enjoy it. Also, I mentioned last night with Chris, it helps you whenever you're trading with money that you don't need, right? I've seen so many new traders get burned because they're trading for, or trying to trade for an income, and that usually doesn't end well. Based on my experience, because I went through it, guys. I tried doing it whenever I was day trading, because I hated it at the time. I had a 9-to-5 that I hated so much, and I was so desperate to get out of it, which is why I picked up trading. And hindsight 2020, that was probably one of the worst things that I did whenever I first started. Was I was just desperate, you know, and I was trying to trade for money that I just didn't have, and it was self-destructive, you know. So if we're patient and we don't really go looking for the setups, and we let the setups come to us, and we have our strategy and we're disciplined with our strategy, we can become a very, very, very dangerous trader. And this is a skill that we can inherit for the rest of our lives. And we could be literally 70 years old sitting behind a screen trading stocks using the same strategy that we use for decades. So that is my spiel. There are certainly a lot of subtle nuances to everybody's strategy, right? But that certainly requires more than one lesson for sure. And it looks like we have about 80 some people on here now. So let me hit up some questions in the chat. Rashawn, do I alert or do I offer one-on-ones? I do alerts, but whenever I do that, I make sure to give the full context of my trade, because we've all been in Discord chat rooms that or trade signals or whatever that just say buying XYZ stock at this price level with no context behind it, and that does nobody any good, right? So I do my best to say, here's what I see on the chart. Here's my entry. Here's why I entered it. Here's my stop. Here's my sell targets. Here's why I have my sell targets. I try to give as much context as I possibly can. And yes, I do offer one-on-ones, but I haven't done that for quite some time. just because I'm just so dang busy. I want to make sure everybody's getting value. Let's see here. Yeah, you're welcome, guys. This is fun. I could talk stocks, talk stocks all day, every day. So I'm glad you guys are getting some value from it. Kazaya, I think that's how you pronounce your name. This will take some practice, but it is the first time. It all makes sense. So thank you. You are very, very welcome. Yeah, trading is no different than anything else, guys. It's like my 5-year-old. My 5-year-old's trying to start riding her bike without her training wheels, and it's not like she's going to get on without the training wheels and just get it immediately, unless she's like a prodigy, which that she would say she is. But it just takes time. It takes time, and too many new traders try to force this, and you can't force anything in life, because the more it's like here's a perfect analogy. It's like all us fellas, right? Whenever us fellas we're single men, and we're looking for a beautiful woman, right? And ladies, you can vouch for this too. And the more we like push it and we try to pursue her, and we just keep being overly aggressive with it and forcing it, she tends to pull away a lot more often, right? Whereas you're more natural with it and organic with it, then you guys meet mutually, right? That's what we want to do with trading. We don't want to force it. We don't want to chase money, because the more we chase money, the more it runs away from us, right? So experience, that's what we need. And this is what I preach to all my people is, you're within your first year, statistically speaking, this isn't me saying, just statistically speaking, you're going to be net negative at the end of your first year, and in terms of money. But if you happen to make money after your first year, consider yourself very fortunate. Take you and your spouse out to a nice steak dinner, because you deserve it. But in the first year, I believe, in my opinion, that your goal is strictly to learn, stay afloat, don't blow up an account, because after 1 year, even if you lose money, you have 1 year's worth of experience. That's what we're after whenever we first start. Experience, time in the market, trades under our belts, right? Because then we can leverage that experience, and then all of a sudden we have 2 years experience, and a lot can change in a year, a lot can definitely change in 2 years, and then we just keep building on that experience. The longer we stay in the game, the more likely we are to hit the home runs, right? Until then, we just want to settle for walks and singles and doubles, right? That's probably the most important advice that I can give to new traders. Does Thinkorswim let you mark up the chart with your cost basis, or are you doing that manually? I do all these lines that you guys saw in the charts. I do all that stuff manually. Knowing Thinkorswim, there probably is a way to do that automatically, but this is just something that I've done since my day trading days. I'll go in there and I'll put my line tool on Thinkorswim, and then I'll just type in cost basis and put in my cost basis. So I do all that manually, yes. D Butler, you're welcome. You're welcome. As a swing trader, Jeremy, are you mostly basing your trades off the daily chart? Yes. I strictly use daily chart for all my trades, and occasionally I'll zoom into an hour chart, or I'll zoom out to a weekly chart occasionally. Whenever I can't quite see a clear picture, that's when I'll go across different time frames to help me get a better, clearer picture of the trade. But intraday, whenever I go, like I'll zoom into like a 10-minute chart whenever I'm selling a position. So if I'm getting ready to like a swing trade has hit my sell target or a sell target, I'll zoom into a 10-minute chart, and I'll just gauge momentum, because if I have my sell target set at $10, let's say, and I zoom into a 10-minute chart, that momentum may take it up to $15 in that same day. So I'll zoom into a 10-minute chart whenever I'm scaling out, just to capture and maximize on the momentum. Caleb, I'm glad you got some value from it, brother. Jay River, thanks, Ashton. You're very welcome. What was the float on my FinViz setting? Under 20 million, Tiny. That was my FinViz setting for my float. That's what I use, because any float less than 50 million is very, very small. Anything less than 20 million, which is what I use, is tiny, right? And for those of you who need a little bit more clarification on float, what float is, it's the amount of shares that is available to the public to trade, right? If there are less shares to be traded, it's a supply and demand thing, right? Less shares means that if the demand goes up, that shoots the stock up very, very, very quickly because the supply is low. Hi there asks, what are the steps when you first sit down to hone in on which stock that go to your watch list, ETFs, what to put on your screener? There's a lot going on there in your question. But essentially with my watch list, a lot of my watch list remains the same at all times, right? Occasionally there will be a new stock that will hit my watch list. That's mainly for my quick hitting strategy, because quick hitting stocks they'll run up and they can come back down. But for the most part, for my accumulating strategy, that watch list remains the same for the most part. Like I'm talking high quality companies like Walmart, like Shopify, like Delta Airlines, quality companies. So I'm always watching the same batch of stocks at all times. What side am I using for my charts? I use Thinkorswim.
You did not eat it. No, bring it, cover.
Just cover anyway. But I did
How do you guys contact me? Just hit me up on Instagram, guys. I try my hardest to answer all my DMs. So if you guys have any questions directly for me, just hit me up directly on Instagram. I will do my best to get back with you. Ace asks, on the first chart, what are the initial lines you refer to, price action? How did you set that up with fibs? No, on the first chart that I showed, if you're asking about my sell targets, those are based on previous resistance, previous areas of support and resistance. That's all. I only use my Fibonacci lines that I showed you guys. I only use that whenever a stock is breaking new all-time highs, right? If a stock is breaking new all-time highs, we don't have a previous reference point of resistance to go off of. So that's the only time I use Fibonacci. Somebody asked, what is the cost basis? So the cost basis, that is my average cost, like my average position, right? And that changes over time. And Thinkorswim will give this to you automatically. It's automatically calculated. So let's say you buy 10 shares at $50, then you buy another 10 shares at $60, right? Your average cost basis is 55, right? That's your average. So that's what that cost basis reflects, my average position at that particular time. Tori, this one's great. I'm still learning, so definitely got to watch this over and over. How long did it take you to get your pattern of trading down? It depends on which strategy you're talking about. For my accumulation strategy, that took me about, well, I've been swing trading for about three and a half years, and it's just evolved every single year. The base and the meat of the strategy has remained the same for the past three and a half years or whatever. But subtle differences, like certain indicators, like I used to use the MACD. You guys probably saw that on my chart whenever I showed my chart, but I don't use the MACD so much anymore just because I don't need it. But I do use the MACD for my long-term holds. I think MACD is perfect for your long-term holds whenever you want to add to it. Yeah, RV, he says, thanks, scaling in and out will help everything. Guys, other than being patient and not chasing trades, the second most important thing, I talked about this with Chris last night, the second most important thing I can tell you guys is, if anything, whenever it comes to trading, especially swing trading, The number one most important thing you can learn and master is how to scale in and how to scale out of your trades. That's where a lot of new traders get hung up, and that's where they fail because they don't know how to or don't care to scale into their position. They want to get in right now because they're afraid that they're going to miss the move. Guys, if you get into a position, you're scaling in, and the move just goes, and you're barely into a position, let it go. Let it go without you. It's fine. It's like what Gucci Mane says. You know, there's a I forget how he says it, but there's a bus in the next 15 minutes, another one's coming, right? Stocks are definitely that way. So if you haven't built up a full position and a stock runs without you building that position up, let it go, let it run. It's fine. There's going to be another one coming up. You just got to wait and you got to be patient. Michael Martin, advice for a smaller account. I do have advice for a smaller account. And this isn't philosophical advice either. This is practical advice that you can use right now. So I can't tell you what stocks to buy. I can't legally, and nor do I want to, nor should you want me to. But what I would do if I had a small account, let's say $1,000, okay? And a lot of people get into day trading so they can quickly build up their account. That's a mistake. But let's say you had $10,000, right? Would I recommend putting $10,000, the full $10,000 in to start trading with? No, I wouldn't. Even if I had 10 grand, I would still start with $1,000. So that way you can build a proof of concept to yourself, and you can learn the discipline that it requires to become a trader. Because that wouldn't make much sense for a new trader to put in 10 grand only to see all of it go away. Because you're going to lose money. It's just a matter of how much money you're going to lose and how much money you can keep. So even if I had the money, I would still start with just $1,000. And yes, you can trade with $1,000. And here's exactly how I would do it. I would spread that across $1,000. I would spread it across 5 different stocks. Okay. So let's say $200 for each trade. Why? Because handling multiple trades at one time is a skill in and of itself. And you need to learn as a new trader how to balance more than one trade at a time. Now, it could be 5 trades, but it also could be 3 trades, right? The point is, but I would definitely do more than 2. I would say 3 is the minimum. But you want to learn how to handle multiple trades at once, because that, my friends, is called portfolio management. And we want to get in the habit of doing that. So that's what I would do, is have $1,000 sprinkled across 3 different stocks. And I would also look for stocks between $10 and I would say probably $50, because we want to make sure that we have enough shares, right? Let's say we spread it across 5 different stocks at $200 a pop, or $200 each. It wouldn't make sense for me to go buy a stock that's $150 a share, because you would only be able to get 1 share, right? The whole point is to scale in and scale out. So we want to make sure that we get minimum 5 shares of each stock. That's exactly how I would do it. So that way you're learning multiple skills at one time. What time frame do I use? I strictly use a daily chart. An MGNI, which is the fast moving stock I showed you, when it decides to move back up, what would you do in the case it gets rejected in that previous small resistance? Would you secure some profits? Alexander, yeah, I probably would. Yeah. Because if it goes back up to a previous resistance spot and it still can't break it, yeah, I'd probably scale some off there. Yeah, for sure. How long does it normally take, watch a stock before getting in? That's a great question, Jill. Sometimes I'll watch a stock for a week. Sometimes I'll watch a stock for a couple weeks. Sometimes I'll watch a stock for 2 days. It just depends. But the point is, I don't get into a trade until I'm convinced that it's ready. And a lot of that has to do with timing too, like just coincidence. You know, how you randomly stumble across XYZ chart. You know, you could find it on a Monday, or you could find it on that Friday. It's just a matter of the timing. A lot of that has to do with timing too. But the point is, it's just that never jump into a trade until it's ready, until you're ready to. Sydney, this was incredible. You're welcome, Sydney Parker. Do I use any other resources besides FinViz, Thinkorswim to search and analyze stock opportunities? Whenever I go to analyze a trade, no, not really. Not really. I'll do a little bit of fundamental analysis. Like for example, I want to figure out if a stock has been beaten down to the downside. I want to understand why, right? And a lot of most of the time, the reason is overblown, just because fear is a stronger emotion than greed. So fear allows traders like us to step in and see some opportunity. But the biggest thing and how I analyze a trade is the chart. The chart will teach you so much about a particular stock. And eventually you guys will get to the point to where you've seen so many charts to where you can actually reverse engineer a stock. Like I've been trading so long and I've seen so many charts to where I could probably pull up a chart, and based on the chart and the price on that chart, I could probably give you a rough estimate on fair value of the company just on the price action that I'm seeing. And that's where you guys want to get to. And you guys will. What site do I use for the charts? I use Think or Swim. Thanks, Jeremy. Thank you for the kind words, brother. I appreciate that. What is my IG handle? It's Ashton Noland, all one word. It's my icon on Instagram is like a little animated version of me with a stock in the background. Ashton Noland, all one word. I have so many questions, I can't keep up. I love it though. How do you check the float on a stock? You can check the float pretty much anywhere. You can check the float on Yahoo Finance. You can use finviz.com. There's a lot of different resources out there, but Yahoo Finance and FinViz are my go-to tools to check float. Yep, NASDAQ has it too. Yeah, there are a lot of different websites that have float information. Someone asking about my chat room. Chat room should be accessible. Just go to my website, ashtonnolandtrading.com, and just click on join chat room. It's right there. Everything should be good. Everything should be flowing. If not, Rashawn, if you guys have questions on the chat room, just send me a DM on Instagram. Just let me know. Tips for mastering charts. This is the last question here, guys. Michael Martin, tips for mastering charts. Look at your charts. That's how you master charts. Like, how do you become a great guitar player? You play the guitar and you do it a lot. Charts are the same exact thing. For me, I use candlesticks on my charts because they show you more of the price action. They show you the open and the close and the high and the low in a particular day. So that's why I like candles. That's just a personal thing. But yeah, if you guys want to learn charts, you guys want to master charts, guys, whenever I first started trading, my first year, and you guys think I'm exaggerating, I'm not, my wife can vouch for this. I was looking at charts for 8 to 10 hours every single day. And at the time, I had a 9-to-5 job. So I was literally looking at charts while I was at work. I was looking at charts. I would get off at 5 p.m. and I would come home, eat dinner. I would be looking at charts from 6 p.m. all the way till about 11, 12 o'clock at night, every single night. And then on the weekends, I was putting in about 10 to 12 hours just looking at charts. That's it. And I did that every single day for about a year. And until one day charts just started looking less overwhelming to me, and they were just clear to me at that point. And that just takes a lot of time. You guys ever heard the rule of 10,000, right? You have to dedicate 10,000 hours to really become a master of something. Personally, I believe that to be completely true. And I actually did the math just roughly one day. And at that point, I've been about a year and a half, 2 years into it. And I'd put in about 16,000 hours worth of just looking at charts and trading. So it requires a lot of time, guys, but I'm telling you, it's worth it. It's so worth it. I know it can be boring. I know it can be overwhelming at first. But steadily just sharpening that knife, that tool, and can make you a very, very dangerous trader. Anyways, guys, I do have this recording. We went about an hour and 15 minutes, so we're in pretty good shape. So I am more than happy to offer some value to you guys. Like I said, I love doing this stuff. It's truly a passion of mine. I never had any clue that I would someday be teaching people how to trade stocks, but I truly enjoy it. So if you guys have any questions, hit me up on Instagram. I'll do my best to answer all your questions over there, okay? All right. Peace out, guys. Have a good night. Have a good weekend. Spend some good time with your families.